Yo, what's up, everybody? Of course, welcome back to ZML's FX TV show, where I bring to you knowledge about trading Forex and how to be consistent in trading Forex, and of course, how to make money trading Forex. And I share with you the best strategies that can help and improve your trading career. If you're new to this channel here, guys, before I start on, make sure you keep following and make sure you subscribe to subscribe to the channel, and of course, don't forget to hit the notification bell so you don't miss most of my videos. Okay. Now let's move on straight away. Today's video, I'm going to explain to you the best strategy that you can use to grow a small account like $20 or $30, okay? Up to any amount that you want. So the first thing that I'll always advise you is this, guys. Always go for what you call fast the trend. I'm going to explain to you something. So always first trade with a continuation of a trend. You get that? Always find entries in a continuing trend. Let me explain to you that. So I'm going to show you some of the patterns that are very important in trading, okay? And let me give you an example first. So imagine, let's say we're not imagining, of course. Let's say we are in a bullish trend. Of course, this is a buy trend. Okay. So now when you talk about patterns that continuation patterns that of course give you the light that you're still in a bullish trend. There are patterns to deal with, like the bullish flag. You get that? Now we are going to spot examples, of course, in the charts. You get that? Now the first thing that you have to first do is you first have to first understand the trend. Okay, let's say we are moving into a bullish trend. Of course, you know a bullish trend has got higher highs. Of course, that is a characteristic of a bullish trend. Okay, now it's not a must that price is just gonna move like this. When price moves like this, it's like trading is so easy for you that no, there are a lot of things that you have to understand in trading. Okay, that's why if I'm talking over the patterns like a bullish flag. Let's say price has been moving like this, then you have this, okay, then you have this, then you have this, then you have this. You get that? Then you have that, okay? Those are patterns that I'm kind of talking about. Now, let me talk about this pattern very well. So why I'm saying that you mainly look for these patterns is because there is a high chance of you grabbing that trade, and there is a high chance that that trade will turn out in a positive way. You understand that? Because a trend is always your friend. A trend is always your friend. And when you see such patterns like this, it is assured that you're still moving on. It only takes patience for you to take it in the market. If you watched my live video last time I spoke about your AUD, about that pattern, then you would have understood what I'm talking about. Okay. Now, let me tell you, let me repeat this. Okay. I'm talking about the bullish flag. And come like this. Then like that. Okay. Now what you have to understand is I call them all these ones, I call them mini laws. Why? Because they are like, it's not the real, it's just like a small a mini trend. You get that? The overall trend is bullish. Just like here, the overall trend is still bullish. Okay, but we have these laws here. These laws here. And now, now let me tell you a secret, guys. Whenever you see a bullish flag, you get that, and you find a bullish flag making a strong low, then again it repeats at that same point. Okay, just imagine it has reached a point where it's very hard for price to break this. We are just expecting for a push up. Okay, let me give you. Let's see this example. Let's see this example. So we have an example like this, guys. You can see very well we have got higher highs. Okay. It's a bullish trend. You can see that bullish trend. Okay. Just a moment, guys. You can see this. This is a bullish trend. Price attained a higher peak. Then we have this type of correction. Okay. We call this correction. Then price is respecting this point. Now, what you need to know is this. Let me explain to you this. What you need to know is this. I want you to draw your, just a moment. Let me draw this. Okay. You get that point? These are correction zones. Correction zones. You can see that price is rejecting at this point, and I can promise you that in the next coming week, it's very hard for price to break this point here. It's very hard. So why am I talking of continuation patterns? Continuation patterns are kind of more accurate. So for you to grow a small account, you only need to take one trade, like 0.01, and hold your trade. And of course, I would always advise you to take trade at this point. See, at these prices. You get that? Where if you look at these prices, there is collection of many. This the dealer is trying to make you collect a collection of many what? How can I say? Many. Let me explain to you something. Liquidity graph. Let me explain to you something here that's coming to my mind. So if you look at this, you see there is a fake candle here that I want you to try to look at this. It's a continuation buy, a bullish stuff. But I want you to look at this candle, this long bearish candle. You get that? What does this really imply? So what people think is they'll be like, the bearish momentum is so high, let's sell it. You get that? This is just a false stuff. You get it? But the buyers are still, the trend is still bullish. You understand? We have this tip, this lower low. We have this tap here. Then we have the next touch. Then the next touch with a strong bearish candle. You get that? But it's still respecting these touches. Now, what I always do here is I wait for when I find these entries, I always start adding my trade. Let's say I have $20. I can add here 0.01. Okay, 0.01. You get that? Now, another thing that you need to notice also is this. If I'm to draw that, you notice something like this. You get that? Hope you can see that, guys. And one thing that this pair has already done is it's breaking. Sorry. Something like that. You get, so what I'm waiting for as a trader is I'm waiting for something very easy. I'm waiting for a break at this point. This is what I'm expecting. You get that? So this price is still moving up. It only takes patience. That's why I'm always advising you that what you need to do as a trader is find confirmation patterns, because they are kinda, not even kinda, but they are more accurate in the market. You get that? So if you're looking for this time, you're only going to be looking for bullish entries. Okay, so another strategy that I'm going to talk about is when you find many touches, guys, many touches. If price is touching the same point, then there must be something behind that point. Okay, so this time there is a high chance that you can easily look for buyers. And if this happens, if you see strong rejection points, strong rejection candles, of course, okay, that are rejecting the sellers, there's a high chance. The other thing is don't always trade against the trend. In such when you're trying to grow a small account, don't always trade against the trend. You get that? Because it's very hard for you to get, it's very hard to get, by the way, a beginning trend. You have to know that. So I would never advise you to trade against the trend. So the same thing goes to the bearish flag. Get that? A bearish flag, let's say price has been falling down like that, okay? Then you have a mini, this type of correction. You get that? But it's always respecting the first, this pullback. Let me say this our lower low. That's the last lower low, another lower low. And after this lower low, of course, we have a correction. You get that? Then impulse. Okay, let me explain this again so you understand this. So I'm saying price has been falling, impulse, correction, or a pullback. Okay, then price gets support from here to push the next lower low. Another lower low, which is impulse, correction, support again here. Another lower low. You get that? Correction, another lower low, then maybe. So in this correction, which is support zone, we start to see a what? A bearish flag. You see this? You get that? You get that? Okay, so what you're expecting as a trader is you're expecting price to, of course, break and still come up to this low, then that's where you're going to be entering your trades from. You get that? So why am I talking of continuation patterns? Continuation patterns are very powerful, very powerful. And I told you one thing is never trade against the trend. Why is it that we should never trade against the trend? It's very hard to get though it's not all that hard, but it's always advisable not to trade against the trend. It's always advisable not to trade against it. If you look at even H1 here, it's still almost the same thing. Just if you look at H1, it's more open, guys, more open. Like it's real more open. I don't know whether you can see these mini lows here. I don't know whether you can see these mini lows. 1, 2, 3, 4, 5. Then the next time price is respecting this low, that mini low here in H1. So basically, I always use H1 and H4 for if I'm looking for entry points actually. I don't come below. I don't use minute stuff. I only use this. You can see this. You can see this. I hope you can see this, guys, very clear. You can see what price is doing. You can see this. See this. What is this? Higher high, higher high. This is a resistance level of a trend, because when a trend is moving higher, remember when a trend is beginning, an uptrend, okay? Impulse. Whenever you find a rejection, that becomes your resistance. So there was some resistance here where sellers had to come in, which is of course a correction. Then the buyers get more strength here. They get support. They push again price up. You get that, like that. Now we have a correction. All this correcting. See this until our previous tip here. You get that. The best thing is this tip was already broken. And what are we having? We have one touch, then another correction, second touch. Now, what are we expecting as a trader? What I expect as a trader is price will still buy, but what we are seeing, you can see this. You can see that price had already broken at first. See all that thing. So its price is just trying to, it's just, you see what the dealer does is, there are so many impatient traders in the market. You get that? So what you're just waiting for is only either a breakout or price coming back to the next level. But when price comes up to here, what you need to be very careful of is a stop hunt, which will hit your stop loss, liquidity grab, like grabs your stops and moves, of course, away from you. You get that? So that is what you need to master as a trader. Always, whenever you see continuation patterns, don't leave them just like that. That is an easy trade. Only needs patience. The most important thing there is patience. You understand that? Yeah. So there is no way, I don't really see this pair coming down. For real, I really don't see anything like that. All I just see is price has to move up because of a continuation pattern that you're seeing in the market. So it's an open trade, but it takes only patience for you to be able to succeed in such a trade. So if you're going to be growing your small account, let me tell you, there's what you call growing an account, a small account aggressively, then growing an account slowly. Now, what is aggressive growing an account? Let's say you took your trade from here and price moves up to, like, let's say 25 pips, 25 pips. Let's say you had $20, 0.01, you use 0.01, one trade from here, 0.01. Remember, let me tell you one thing, guys. If you want to make money, a lot of money in trading Forex, you're not only going to be a coward by only using 0.01. I'll be honest with you. Now, let me show you how I take my entries, okay? Now, I'm going to be marking every step. Let me repeat this. Let me repeat so that you see where I'm going to, let's say where I'm going to be putting my entries. Just a moment. Let me show you where I'm going to be giving an example where I put my entries. Because if you want me, when I'm growing a small account, I grow it aggressively. That's why I grew. It's not too much, but I grew 10 USD to 35 USD. Not so much aggressive, but I was adding more entries whenever the trade moves well. Okay. Now let me show you where, if I'm to take this trade, if price comes up to this point, of course I take 0.01. You get that. Let's say price has moved up to 25 pips. 25 pips. I add another trade. Now when I add another trade, it means that if this trade, I add another trade and I move this, the first trade I took, I first move it I first move the stop loss to entry point. When you move the stop loss to entry point, it means even if price comes against you, you won't lose that trade. So the only trade which is in stake right now is this trade. Like if I'm to lose the trade, it will only be this one. You get that? So it's like you're having two trades, but one is already safe. That is aggressive trading. So let's say the traders again moved up to 40 pips and you still expect it to move to 100 pips. You keep on adding. Then after adding, you again move the first trade to at least a stop loss of at least a profit of 15 or 18 pips. You get that? So that you won't lose a lot of money if the trade goes against you. But if the trade goes well for you, then you will end up even scooping something like $50 or $60 or $40 or $30 at least. So that is an aggressive way of growing an account, but of course in a smart way. You want to blow your account. One thing is, in aggressive way of growing account, you want to blow an account and you'll grow very fast. You get that? Because I've told you very well, what I do is I first enter my entry, first trade. I take it. If my trade moves positively for me until 25, let's say 25 pips up is here. What I'll do is I first get this first trade, I get the stop loss and I move it to, I get the stop loss and I move the stop loss to entry point, meaning that trade is safe. If the trade comes against me, I won't lose anything. Then I add again another entry, meaning if the trade goes against me, I'll only lose one trade, which is this one that I've just added. Get that. So let's say my stop loss is 15 or 20 pips, meaning I'll lose $2 if I'm using 0.01. You get that. Now let's say the trade again moves up to 40 pips. If trade moves up to 40 pips, I will again get this. I will get the second trade, which is this that I'm talking about. This that I'm marking here. I will move the stop loss to entry point. So meaning this trade and this trade will be safe, but this trade here will again move the stop loss to at least up to this point. So meaning if the trade is come back, I'll at least close a small profit of maybe 10 pips. So meaning I'll be having 3 trades running already. If 80 pips are hit very well, I'll be almost 28 USD. That's the aggressive way. So the more the trade goes positively for you and you still expect more moves, the more you add more stop, the more you add more trades. Let me tell you one thing, guys. If you want to grow a small account, to be honest with you, you're not going to be using 0.01 and you hold until 80 pips while being patient. That is not the way of making money. Sometimes if you want to make money in trading Forex, you have to be aggressive. I'm being open to you, not aggressive in a stupid way, but aggressive in a wise way. You calculate your moves very well. That's why people tell me that how comes you have so many trades? No, I keep on adding my trades, adding my trades, adding my trades in a way that I cannot blow my account. You get this? In a way that I'll lose very little because after the trade has moved to these profits, I add more. These profits will compensate for the next trade if the trade goes against me. If the trade goes well for me, I would have booked enough money for myself. So you see how it's easy to grow a small account. You only need to be smart. Then another thing is, of course, is confidence. If you're not confident that if you do not have confidence that you're going to grow a small account, then I promise you won't grow it. If you're fearing to add more trades, it's all about knowledge, guys, and being bold in the market. Yes, being bold, add more trades, but of course, calculate your moves very well. Every trade you add, you ask yourself, how much am I going to lose? Okay. Now, you see, if I'm adding these 3 trades here, let's say the trade has price has moved up to here. When price has moved up to here, I would have added something like 5 trades or 4 trades. And that is, let's say that's 50, 60 pips times 5. That is like 30 USD. If you have only $20, but so what you also need is you need to find a good broker and increase your leverage like to 1 to 2,000. That's Xness broker. Don't forget this video is being brought to you by Xness. Check my description. Of course, join my Telegram group. And of course, part of my trading. And of course, second thing that you need to do is, of course, open yourself a trading account with Xness. If you need more help, check my bio. You will get my contacts there, and I'll be able to help you guys. So don't forget to leave a like and of course leave a comment. What do you think about this video, guys? So that YouTube can recommend it to other people. I wish you all the best, guys. See you next time, guys. Bye. It's of course Mr. Zia Miles again. Thank you always for supporting me. I wish you all the best.